Each year, the trustee and Railpen publish something called a stewardship report, which meets a high bar for stewardship set by the regulator. A stewardship report is just what it says on the tin. How do we act as good stewards of other people's money? And in particular, how do we incorporate topics like sustainability and corporate governance into the investment decisions we take on members' behalf? And what are the outcomes of doing that? You pay pension contributions, and we invest that money in companies all over the world to generate an investment return that pays for your pension when you retire. When we're thinking about which companies to invest in, we know that some are very well run and some are less well run. We know that some have sustainable business models and some face sustainability threats. The important thing is that sustainability issues can turn out to be financial risks over the long term. It's important for us to make sure we direct our investment choices into more sustainable and better run companies to improve member outcomes over the long term. There's also a vast array of investment opportunities presented by sustainability issues. We need to make sure we're not missing out on those either.
To ensure our work is focused on the matters that are most meaningful to members, we asked them to tell us what their main areas of concern are. In 2021 and 2022, these were fair treatment of workers, climate change, and fair pay. This has shifted slightly in the last year to fair treatment of workers, fair pay, and making sure boards can be held to account. Members have also told us that governance more broadly, or how well a company is managed, is really important to them.
The potential impact on or importance to members is key to the issues we focus on. So too is the materiality of the issue to our portfolio, alignment to our investment beliefs, our ability to make a difference, and Railpen's expertise. In 2023, we prioritised 4 ESG themes, which were worth of the workforce, sustainable financial markets, the climate transition, and responsible technology. We chose these 4 ESG themes because evidence shows they would have the biggest impact on all or most of our investments. Our priority themes guide us in deciding which collaborative initiatives we should participate in, or where it might be worth creating and then leading something, should we identify a gap in the market. These 4 themes are also big picture issues, and we need to think about big picture ways to influence the behaviour of the companies we invest in. We work to influence policymakers to change their regulations, as well as working with other investors whose aims are aligned with our own to try to amplify our voice and have a positive impact. We know that how well a company looks after its workforce has a big impact on its long-term financial performance, and therefore on our ability to grow and enhance the value of members' savings. We also know that workforce treatment is the #1 sustainable ownership issue for our members. We therefore work with companies to help them improve how they treat workers, as well as ensuring that they provide investors with the information we need on their workforce approaches, to help us understand how meaningful a company's approach to looking after their workforce is. A priority area for us has also been how companies include the voice and perspectives of their workforce at the highest levels. So, we set up a coalition, together with many other investors, to speak to companies and policymakers about the best ways to ensure workers are being heard by company management and company boards. Our first port of call is usually to persuade the companies we invest in to improve their behaviour. However, if they don't make the progress we want to see, we will consider removing our investment. This is also known as divestment. Sustainable financial markets involves us working to support an environment and company structures which allow investors' voices to be heard, and enabling high-quality company reporting which gives an accurate picture of a company's financial health. It includes our work on dry-sounding issues like unequal voting rights and the quality of the audit. We have several tools we can use to influence the companies we invest in to improve their approach to corporate governance. These include speaking to the company privately, either individually or alongside other investors, or making our views known publicly, including through the use of our voting rights. As shareholders, we are part owners in a company, and this usually carries certain rights, including the right to vote at company meetings on corporate governance and other issues. This vote is important because it is a public expression of our approval or disapproval of a company. And if enough investors vote in a certain way, it can even force a company to go back to the drawing board and come up with new plans and policies. How Railpen votes at the companies we invest in is explained in our global voting policy. We update and publish this each year. And if you're interested in finding out more, I'd encourage you to look it up on the Railpen website.
Climate transition is about how we move as a society from where we are now with high greenhouse gas emissions to a future of net zero emissions and where we're much more resilient to our new environment. Climate transition brings a lot of risks and opportunities. Companies will have to change, many new investments into, for example, renewable energy will have to be made, and some existing industries will fall away. Our job is to navigate all of these changes as best possible, and that will involve talking directly with the companies we invest in about how they're adapting, their plans to bring down emissions, how they'll support their employees through this period, and what new and exciting technologies they're developing. To highlight a couple of case study examples, 2 companies that we engaged with were Nucor and WEC Energy, both based in the US. Nucor is a steel producer and WEC Energy is a utilities company, both facing real climate risks and opportunities.
Responsible technology is our approach to evolving threats and opportunities in the digital landscape. In particular, this covers cybersecurity and companies' use of artificial intelligence. We know this issue is a lower priority for members. However, we see for ourselves the huge impact poorly handled tech issues like a cyber attack or failing to control misinformation can have on a company's bottom line. So, although we don't discuss this in our member review, because we want to talk to you about the issues you care about the most, we do spend time speaking to companies about responsible approaches to technology. You can find more information about our work on these issues in our main stewardship report.
There's always room for improvement, but some of our major wins last year include forming great coalitions with other global investors to pressure for outcomes that serve our members. Coalitions such as the Investor Coalition for Equal Votes. We've gotten closer to our net zero targets, although there's clearly a long way to go. And then there's the ordinary everyday work of digging deep into investment research to direct investment decisions so that they're sustainable and the right ones for our members. We're always learning lessons. For example, we know members prefer shorter, sharper communications from us. We know members want us to continue to focus on corporate governance issues such as executive pay and big topics like climate change. And just on climate change, we learn all the time how complicated this topic is, but are constantly reminded of its importance for good member outcomes over the long term.